Hello and welcome to the Global View on this Friday. I'm Andrew Gagan. Thanks for joining us here again at AusBiz. Let's get across those market moves overnight. Equity markets slumping further as attacks on energy infrastructure in the Middle East war caused oil and gas prices to surge yet again. Wall Street's major indices ending lower as the prospect of accelerating inflation stemming from soaring energy prices left investors pessimistic about the potential for future interest rate cuts, and interest rate futures suggesting traders see little chance of interest rate cuts before the middle of next year. Now, just getting to some stock specifics, as you can see on the screen there. Micron Technology falling after the memory chip maker's quarterly forecast failed to impress investors. They've sent its shares soaring over the year on strong AI-related demand, while Nvidia also ended lower. Tesla shares reversed after an investigation gathers pace into more than 3 million Tesla vehicles with self-driving assistance on concerns the system may have inbuilt failures. Whereas shares of fellow EV maker Rivian advanced on news Uber will invest up to $1.25 billion in the company to deploy fully autonomous SUVs as robo-taxis from 2028. US listed shares of Alibaba fell as quarterly revenue missed estimates. Metal prices fell heavily as markets priced in lower economic growth. The gold miners tracking the gold price lower, and the silver miners also falling on expectations of tighter policy from central banks. Similarly, the copper miners tracked the price of the red metal lower. US listed shares of BHP and Rio down sharply. And US listed shares of family tracking app provider Life360 fell on a broker downgrade after citing elevated execution risk and stalling international monthly active user growth. Well, a raft of central banks have made policy decisions in the past 24 hours, all committed to tackling any surge in inflation with tighter policy. The Bank of England, European Central Bank, and the central banks of Switzerland and Sweden left rates on hold, but made out that rising energy prices could spark a wave of inflation, wary that it could prompt higher wage demands by households fearful of losing purchasing power. ECB President Christine Lagarde saying the Eurozone was resilient and that low inflation meant it was well positioned to deal with what she called a major shock that is unfolding. The central bank raising its forecast for inflation this year to 2.6%, above its 2% target. Meanwhile, Israel's Prime Minister has said his country would not target any more Iranian energy assets as strikes on energy plants and subsequent retaliatory attacks sent energy prices spiralling. And the Trump administration has indicated that it's considering sending thousands more US troops to the Middle East, but the president said he had no plans to deploy ground forces. Well, US two-year Treasury yields have touched a 7-month high as markets digest cautious rate decisions by key central banks. The 2-year at 3.84%, the 10-year was at 4.28%. Australian 3-year government bond yields rose to 4.75%. The 10-year was up to 5.06%. The US dollar is down more than 0.5% on the day. The Aussie trading at 70.8 US cents. Well, Brent crude surged to $119 a barrel overnight before retreating, with trading volatile as Iran attacked more energy targets, prompting the US government to expand supply. And Iranian attacks are estimated to have taken out 17% of Qatar's liquefied natural gas export capacity. Brent futures, they've settled at around 108 US dollars a barrel. Gold prices dropped more than 4% on inflation concerns and expectations central banks will keep borrowing costs elevated. Spot gold down to around $4,650 an ounce, while silver slipped more than 5% to $71. Copper down close to 2.5%. Iron ore at 110 US a ton, and Bitcoin is trading at around 70,000 US dollars. So let's get across those Wall Street moves. Brad Gastwirth joining us from Circular Technology. Brad, welcome back to you. Let's start with the conflict in the Middle East, the impact it's having on markets, most notably, of course, all driven by those energy prices. How do you see this playing out? It's more than just oil and gas. I mean, we're talking about a number of commodities here.
Yeah, absolutely, Andrew. I think, all eyes are certainly on what's happening in the Middle East. And I think right now, the volatility and the unknown is what's really scaring everybody. I mean, you have some new strikes from Iran hitting Qatar. You have, different, oil fields that are being targeted. And I think these are major concerns. If you look at actually Qatar, there's some, things that go into the semiconductor supply chain, like helium, where they're about 30 to 35% of the market. So there are major disruptions that we got to pay attention to, and I think volatility will certainly remain very high until we have more resolution, which I don't think anytime is going to come anytime soon here in the Middle East.
What do you see as the most immediate impact, or perhaps the lasting impact as well, particularly in terms of semiconductor exposure?
Yeah, I mean, I think that the helium side is interesting because again, I mean, it's Qatar basically has about 30 to 35% market share, a global market share. So, helium is used in all types of parts throughout the semiconductor supply chain. If you look in fabs, if you look in many different areas, and it's something that's not really that talked about. It's also used in hard disk drives, and we already know that hard disk drives are remain allocated for some time. There was a Korean lawmaker that was talking about this a few weeks ago, and then just with this new escalation in Qatar, I think that's something we have to pay attention to. But I think that's really outside of just oil by itself, because energy prices are going to go higher. They have gone, dramatically higher. But I think we have to look at those second derivatives, and I think the helium side is something to pay attention to.
And Brad, we've seen a number of central banks make their policy decisions this week, including our own RBA, but of course also the Fed, with the likelihood perhaps any further rate cuts would be pushed much further out. And how is this affecting precious metals in particular? In fact, we saw the metals market overnight take another big leg lower.
Yeah, I mean, it's a little surprising, Andrew. I mean, first of all, we're still at near record highs, right? So we're not that far away from all-time highs across the board. And, obviously, you and your viewers know for some time that I've been incredibly bullish on precious metals, and I continue to be so. I think right now it's sort of surprising that you're seeing, precious metals down in a higher volatile market from a global perspective, because gold is the one tangible asset that has recognizable value. And I continue to expect gold prices to go higher over the long term. I think you're looking at, if you look at central banks, they're increasing gold reserves globally. So I still think, we're in a good environment for gold. I think higher volatility, and even with the Middle East conflict, if it continues to go longer, I don't think gold goes down. I think gold goes higher.
Brad, let's turn to stock specifics. Micron Technology did fall after the chipmaker their quarterly forecast pretty much failed to impress the market. What have you seen there?
Yeah, I mean, it's a great question here, Andrew, because the guidance, I mean, the company guided to almost $20 in EPS. The street was at 11. So, I mean, we're looking at almost doubling the street guide. Now, were people expecting a big number? Yes. Were people looking for this big of a number? Not really. I think the concern here is, are we closer to the top? And then, there's concerns about higher capex, and then are you going to increase production? I think these concerns are unwarranted right now. I think this is going to see, I think Micron and other memory manufacturers are going to see an extended cycle. AI demand is through the roof, and you can't run AI without having significant memory. So these memory players are going to see this elongated cycle. Micron's going to benefit, SK Hynix, Samsung, throughout the board, they're all going to be winners here.
Now, Brad, also, we've just had the annual NVIDIA conference. What was your key takeouts from that?
Yeah, I mean, it's funny too, Andrew, because at the beginning of the week, there were some reports talking about concerns of AI slowing down. And, Jensen said anything but that. I mean, they increased the total AI infrastructure spend to $1 trillion on cumulative AI sales. I mean, so they previously were at 500 billion. Now they're thinking $1 trillion. They're saying demand is through the roof. He did talk about some component issues, that there are some scarcity, but overall, the hype and the enthusiasm on the continuation on infrastructure build is there. So I mean, you can't find any red flags coming from GTC this year.
And Brad, you point out that NVIDIA essentially is evolving at the moment from just a chip company into something a little more fulsome in terms of what you talk about, full stack AI infrastructure. Just tell us what you're seeing there and where this is likely to go.
Yeah, and these are great. It's a great question there, Andrew, because NVIDIA has been known just for their GPU. That's the graphics processing unit, which is really the key to building out these AI infrastructure farms. If you look at what they're doing, they then moved on to building this rack, and now they're building this entire system. They have the software, they have the networking piece. So they're really, this all-in infrastructure play now. Outside of just being one component, they really, are an all-in-one. And NVIDIA has done an incredible job building out this business. And if you look at what Jensen talks about, they have incredible backlog for demand. I think they're going to continue to be, the key player in AI from a semiconductor perspective. There's obviously emerging threats, but they're still far and away, especially on the leading edge, the best of breed.
Now, overall, given what we're seeing, particularly in AI and demand there, I see you point out that memory is emerging as a key bottleneck. What are you seeing there, and how is that likely to be resolved?
Yeah, I mean, this goes right into the Micron comment too, Andrew. I mean, memory overall it's a need to build out AI infrastructure. I mean, to have, if you're using a large language model like ChatGPT or Gemini and you're asking a request, you need to have a lot of memory at the back end to have a faster response. Nobody really likes, for 20 seconds even to get your response on one of these large language models. And that's what's been happening in some cases. So I think as AI growth continues to explode, memory growth will grow as well. And right now, you're basically sold out for 2026 in memory. Again, Micron, the street was at $11 for EPS next year, and now for next quarter, now they guided to almost $20 in EPS. That's just to shows you, where we are with this, memory and where pricing is. And I expect pricing to go up, each quarter throughout this year. We really have zero capacity coming on extra this year. Next year, you have some more, but I think it'll be all eaten up by demand. I think memory is a very important part of AI infrastructure, and I don't see the memory bottleneck, going away anytime soon.
Brad, always terrific to get across what is going on in Wall Street, particularly with the focus on tech. Thanks for joining us on Circular Technology.
Thank you, Andrew.
Let's refocus then on the local market ahead of the open here on this Friday. After very heavy falls yesterday, we're looking to make something back this morning. At least we're in positive territory, the S&P ASX 200. SPY futures there up around 0.25%. Stay with us, we'll get right across that in just a couple of minutes.